Good day, crypto world. Everyone around the world, welcome to the Day Trade Masters live broadcast right here on YouTube from myself, analyst and trainer Nico here at bitcointaf.com. Welcome to all of you, and this is our third episode. Time flies. Our third week, our third episode. And we like to keep it consistent right here on YouTube. So welcome to all of you. See, people are starting to join us all over the world right here. And great to see everyone on board and everyone here. So let me quickly just check if my sound is working. I'm just going to check. Our third week, testing. Our third episode. Oh yeah, it's working. Great. Everyone can hear me. I got the chat open, 6 views. That's awesome. So welcome to all of you viewing here, and we're going to jump into some great content today. So as the thumbnail shown, we're going to squash some myths of trading, more especially on, say, day trading, medium-term trading, long-term trading. There's so many myths out there, and we need to squash them. We're going to be myth busters. We're going to take it and squash it and get the truth out of it. So welcome to all of you here. So quite a full program today. We're going to go through that. Of course, also our favorite edition of Pattern of the Week. I'm getting a lot of feedback regarding the Pattern of the Week. People love it. That's awesome. And also looking at some examples on TradingView as well. So without further ado, let's first check out some myths. Let's debunk them. Let's squash them. Also, just a reminder, if you love this channel, if you like it, please like and subscribe right below, as well as select that little bell icon. It will give you an alert of when new live content is upcoming and when it's available. So the recording of these lives are also on YouTube, so you can go check it out later on as well. Always reflect back on it. And yes, we love people to watch this content. This is just tips and tricks to make us more powerful traders, man. It's just to just, you know, let us excel, let us debunk the myths. But yes, let's jump right into it. I'm going to go to my little slide here. And there we go. I'm going to start with trading myth number 1. Day trading requires you to stare at 1-minute charts all day. Now, many believe day trading means constant monitoring ultra short time frames like 1 minute or 5 minutes. Now, this is definitely a myth. We need to remember there are different types of trading. There's different types of trading. There is scalping, which is more like on a 1 minute, 5 minute, 10 minute, 15 minute, and then you also have more longer term. When you go to day trading, you're looking more onto the 4-hour time frame, more 2-hour, 4-hour, where candles are 4 hours long. Now, definitely you do not need to stare at charts the whole day when you do day trading, because day trading is more on a higher time frame, number one. And you know, effective day traders use higher time frames to identify trades, and lower time frames more for entries and balancing efficiency and precision. Now, if you reflect back on episode 2 where we spoke about time frames, this is again where we can look at this. We look at different time frames on a higher time frame, say the 4-hour, 12-hour, and check where is a correlation between them, and that is how we do day trading. So yes, we busted this myth. Day trading does not require you to stare at the 1-minute chart. It's more a scalping type of strategy. That's where you look at 1-minute charts and you check out your indicators and you keep with that. So definitely. Let's quickly jump into number 2. Trading myth 2. You need a huge amount of, you need a huge account to make money day trading. You need a huge account to do day trading. So traders think day trading crypto requires thousands of dollars to start. No, it doesn't. I started with very little. To be exact, I think it was 100 South African rand. Now, if you have to convert it back to dollars, that's really little. That's really little. Just to get my toes wet and to check out what's going on in the trading space and how do you start and how it works. You do not need that type of capital or thousands of dollars to start. So with proper risk management, even small accounts can grow through consistent, disciplined trades. Through scaling requires skill. So remember, though, scaling requires skill. How do we get skill? We focused on this again in some of the previous episodes. How do we get skill? We get to training. And remember, BitcoinTAF.com provides a lot of training. All the training you need, from say foundational courses right down to the ultimate trading course, where we teach you technical analysis, indicators, also all of those good things, so you can start trading with confidence and knowing how to trade. So that's very, very important. So no, you do not need a huge account. In a nutshell. Myth number 3. Medium-term trading is just buy and hold with less effort. I wish it was the case. Medium-term trading, just buy and hold with less effort. Medium-term trading, which means holding for a couple of days to say a week or two, is seen as a passive or less technical than day trading. It's not the case. It's not the case. It requires active analysis of higher time frames and strategic entries and exits to capture swings, not just holding blindly. Now, when we start holding blindly, that becomes quite a problem. Holding blindly almost tells me we do not know what we're really doing. We cannot go into blindly into anything. Again, where comes skill? Skill comes from training. We need to upskill ourselves. We need to learn how to trade to do this type of trading. And even with medium-term trading, and I love medium-term trading, it's the one that I'm best at, I believe, is with higher time frames and swing trading especially. And I remember medium-term trading, swing trading, same thing, where you take opportunities in swings over a few days. So trading from a bottom to the top using awesome indicators to do that. So no, medium-term trading is not just buy and hold. I wish it was the case. It's not that easy. You need the skill to follow the trend, to see what the indicators are doing, plan your exit, plan your entry, and going from there. So no. Next one, trading myth 4. Long-term trading means you can ignore the market. Oh my word. Long-term trading means you can ignore the market. No. Long-term traders assume they can set a position and forget it for months. It's not the case. You need constant evaluation of your positions, especially if you have more than one, say, coin or stock or whatever you are trading in your portfolio. You need constant monitoring, like this guy here. You can see on the slide. He's monitoring his computers. He's ready. He's getting ready. He keeps up to date with what's going on his trades. Even long-term trades need periodic monitoring. So, for example, on weekly charts, to adjust for major trend changes and market events. Now, it gets easier as well on BitcoinTAF.com. And what we do here is we've got Marius long-term trade reports. So he gives you a selection of coins which he believes will do well according to his algorithm data, as well as Elliott waves. He applies the skill and a foundation of Elliott waves in it, and then also give you great entries and exits and what he is using. And also, again, using our proprietary indicators that we give with the courses in BitcoinTAF.com. We look at that. So, especially on a long-term trading, we're looking at the detonator, looking at what the detonator can do. Where's the top and the bottoms for it? Because even on a weekly time frame, you need to know where to exit. You need to know when to enter. You need to know when to take profit off the table and keep your profit and enter again. Snowball effect, like we explained in previous episodes too. Trading myth 5. More trades mean more profits in day trading. So I've seen this happen time and time again. You get traders that has like 30 coins open. I do not know how to do that, but they do. And with the idea of the more trades I have, the more profit I'll get in day trading on my, say, 2 hour, 4 hour type of time frame. No. So this myth, day traders believe taking dozens of trades daily increases profits. Remember, you need a good trade in one coin, and you can do very, very well as what you would have done, say, in 4, 5, 6 type of coins that you're trading as well together. I don't say you can't do it, but it's better to focus more on a coin that performs. So remember, there is a term called overtrading. And overtrading often leads to losses due to fees, emotional decisions, quality setups, line timeframes. All of those things come into play. And believe me, even with 4 or 5 positions open, I still need to really look at what I'm doing. And what is more important, where this comes into play too, is overtrading and that emotional decision making, that fees that come into play, these things that I just mentioned, the setups you have, your technical analysis that you did, it's going to play a large role here. And once again, we do teach that here at Bitcoin.com. Ultimate Trading course teach you how to do analysis, teaches you how to take these type of trades. It teaches you how to manage, say, more than 1 or 2 or 3 coins in a portfolio. But yes, this is a myth. More trades does not mean more profits. It's a very dangerous ground, actually, that. Trading myth 6. You can predict exact price targets in medium-term trades. You can predict exact price targets in medium-term trades. So, some traders expect precise price prediction. Now, this is something we need to also really remember here. Yes, you can have accurate support and resistance lines. Yes, you can have accurate trend lines. Yes, you can have quite good technical analysis by using a lot of tools that we teach in the UTC course. But to get to a point of precise on the dot, this is where the price is going to go to, there's no such thing. Markets are very unpredictable. Medium-term trading focuses on the probability of zones and trends, not exact targets. Now, I teach in the UTC course, and we can look at this when we go over to the trading view. We teach in the UTC course there's zones. There's not levels, it's a zone. And a zone is what we move in. So a zone can be 3% up, 3% down from a certain level. That is more an accurate way to approach these type of trades. Now, I believe there is certain support and resistance levels we teach in the Ultimate Trading course, and in Day Trade Masters and in medium-term trade reports, what we use, those levels are, we get them from good technical analysis, from certain techniques that we employ to get to those very strong levels of where trend will go to, where trend will fall to. But we work in a zone type of idea. That's something we really need to remember. It's very dangerous to say, oh, this price is going to go to $100,000. Exactly. There's no such thing. It is definitely a huge myth. Number 7. Indicators guarantee success in day trading. Oh man. I wish there was a one indicator go-to to get you the perfect entry exit in day trade or say in day trading. Although we do in Ultimate Trading course supplier indicator when we use it throughout the bank and Day Trade Masters, as well as medium-term trade reports, as well as long-term trading, to help us see what the trend's doing, to help us see which target that trend will go, which candle it will go to. But there is not one specific type of indicator, and you're just going to rely on that one. That's just that one that's going to show you everything. There's no such thing. What we use is a combination of indicators. More than one. 4, 5, 6. I believe the detonator has up to 24 indicators built into it. So we use a confluence system of looking at all the indicators together and seeing what everything shows us to bring us to our decision of entering or exiting the market. So indicators are tools. We must remember, it's not signals. Indicators are tools. Success still comes from combining the indicators with price action, with time frame analysis, and not just relying on one. So remember, analysis, technical analysis, together with your indicators will give you that success structure. Not just an indicator and there you go. That is definitely a huge myth. Then also, long-term trading is always safer than day trading. We've seen plenty of times in the history how something can quite drop significantly, even on a weekly time frame. So we need to remember that long-term trading with some traders is considered low risk because it avoids intraday volatility. That's what they say. The intraday, meaning the swing, the medium-term trading, or that volatility there, you don't have that on long-term trading. Remember, long-term trades face risk like market corrections. I've seen coins that really fall down very quickly, even on a weekly, where the candle just wicks down. I've seen that. Or if you think of a black swan event, that can also happen. And this type of things really requires strong risk management. Now, if you get into risk management, it's something we can talk weeks about. Risk management, a very important part of trading. You look at trading strategy or risk management, that shows you stop losses, that shows you levels, that shows you again when we bring back what we teach in the Ultimate Trading course, levels, support resistance levels. Now those levels we use for stop losses too. That stop losses is based on a very strong point and a very strong zone, as we said now. So we need to keep to that. That is very, very important. That the stop losses need to be in place. So long-term trading is not always safer, say than a day trading, or where it's a bit more volatile, or where it's moving faster. You still need that stop loss. Now I have this principle when I do medium-term, long-term trading. If I am not in front of my computer, I have a stop loss. If I'm in front of my computer, I usually do not have one. But when I'm away from the charts, there's a stop loss placed. Now, where you put that stop loss, we definitely teach you in our courses. How to place it, where to place it, what techniques we use to place that stop loss. That's a very, very important point, that's for sure. Trading myth 9. Day trade is too fast for proper analysis. That is really a lot of nonsense. Day trade is not too fast for proper analysis. Remember, day trading is usually, you're looking at the 2 hour, 4 hour time frame, right about there. That's day trading. If you go a little bit below that, you're starting to look into eventually into the area of scalping that Analysts is doing in Bitcoin Tower Combo. Analysts foundational course and Analysts course, they are doing that scalping section. Day trading is more 2 hour, 4 hour structure. So some people see day trading as very impulsive. With no time for technical analysis. So they think day trading is more impulsive thing. Just enter, let's see what happens and get out. That type of, no, we should not approach it like that. Successful day traders use structure analysis. For example, trend lines on a chart, pullbacks on, say, a different chart, where are we pulling back? Looking at the technical indicators, looking at our trend lines once again, the support resistance levels. We make our decisions according to that. And again, also on, say, the detonator, are we at the bottom of momentum, top of momentum? Are we getting out at the top, getting in on the bottom? That type of structure that we need. So it's not too fast. 2 hour, 4 hours, quite a nice time frame. I even prefer higher time frames than medium term, because one candle is like 2 hours, 4 hours long. You have quite enough time to see, and again, you got an alert system too. People forget that we have an alert system on TradingView, where you can put alerts on your levels. It alerts you to your phone. So if you're walking around, if you're not in front of the computer, you get an alert on your phone. Oh no, this, say, candle hit this level. Let me get there and go see what's going on and plan my trade going forward. So we have those things in place that we also teach you in our courses. And lastly, the last myth for today, squashing the myth. Medium-term trading doesn't need stop losses. This one I've heard plenty of times. I myself have done this, unfortunately, with very unfortunate consequences. I'm thinking, wow, now this one, it's a 12-hour time frame. Why would I put a stop loss? I'm just going to go to the gym quickly, come back. Things will be still kind of sideways. Come back, and it fell 20%, or it fell 30%. So, like me, a lot of traders in the past believe medium-term positions are safe without stop losses due to longer holding periods. Now remember, medium-term is like a 12-hour time frame, for example. One candle is 12 hours long, but I've seen a candle like that drop very, very quick as well. So we need to be very vigilant there again with our risk management against the stop losses. So stop losses are critical to protect against unexpected reversals, even on daily or weekly charts, and even if you take it more into the longer term time of things. So that was quite a nice little synopsis of how you look at what myths, or debunking some of these myths, busting them. But it's very, very important points that I mentioned here that we need to look at. And it's very basic. It's very basic, but it's good risk management to look at. And if you want to get more into this risk management, we teach you a lot more risk management and trading psychology in both our courses, also on bitcointaf.com. So have a look at those courses. It's a must. I say again, if you're not skilled, do not venture into this world. If you do not have the skills, if you have not skilled up, if you have not done the courses and know what you are doing, it's going to just be a black hole. That's what it looked like to me when I started trading in the beginning. So it creates a black hole for you, and you don't know what to do. You just lose money because you listen to this one, listen to that one, listen to that one. No, find all the information on bitcointaf.com at one place where we teach you how to do that. That is the main secret, of course. So I think it's time for our pattern of the week. So let's jump into pattern of the week. Now, just a reminder that we have the chart patterns book on Bitcoin Trend and Forecast. Now, I can tell you this, a lot is being planned with this book. The team's really working behind the scenes to make this an outstanding product. So just take a sip there of my coffee. So to look at this book, you will find candlestick patterns. You will find trading patterns. You're going to find a lot of patterns in this book. And this book is being updated every almost week, month. And people always have new information in this book. But I want to jump into the pattern of the week, looking at the patterns and looking at what we can look at. So let's go to the pattern of the week for this week. And this is going to be the good old head and shoulders. And no, it's not a shampoo. It's not washing hair. This is trading. The good old head and shoulders. Now, this looks confusing, I know. But I will explain this, how it works. Now, first of all, the textbook anatomy. And as you can see, this is on page 49 of our chart patterns book. The left shoulder, you get a left shoulder here. Then you get a head. And then you get a right shoulder on the right hand side. So you will see from the left there is a bullish trend going up. But first of all, you need a neckline support. Now, I will dive into TradingView now and explain it there with some cursors and with some examples that I have there that we can look at. But I first want to just show you this anatomy and also the breaking down point. Neckline support, so please remember this little structure we had. But you have this in the trade patterns book. You have the full explanation also in the book, and this is on page 49. So let's quickly jump into TradingView. Let's do that. TradingView. So I've got Sui here. Let's first check if there's any questions. I think I haven't looked at my... awesome. A lot of viewers here. I see 2 questions. I'll get to them now. I just want to explain this trading pattern and then we'll get into all the questions. But thanks for all the questions so far, everyone. Great. So let's get back to my TradingView here. So to look at TradingView, you have Sui here. I took Sui on a 3-day time frame. I don't have any levels or anything here, but for the head and shoulders, we need to remember this. So I'm going to draw it here. You usually have this, what you're looking for. You have one trend that goes like this, creating that first up and down movement. Then you get another one that does a higher high and come down again. And then you get one that does a higher low again, and then it moves down. You get this type of movement. So you have the one shoulder here, you have the one shoulder here, and you then have the head here. Now what we need to remember is it's usually the head and shoulders where these 2 shoulders are quite in line with each other. So just don't mind my scribbles here, but this is just an indication. So those two should be more or less in line. If the one is a little bit lower, that's fine. You get weeks that does go to that level, but that's those two shoulders must be, and then it looks like a little head sticking out. So you have a guy, you have shoulders, big shoulders, and then a head sticking out. Then you have a neckline. Now remember, this is the head here. Think of it as the head. Now we have a neckline that runs here like this. Now usually what you're going to see then is when it goes up, going down, you will touch that neckline, it will form the head, touch the neckline again, form the neck shoulder, then move down. What does this indicate to us? It usually indicates we're going downwards. Because when we go past this neckline, it will carry on, say atop this neckline, this is the neckline here, it will carry on top of this neckline, then we will start moving down past this neckline. And this is what we call a bearish reversal pattern. Now sometimes you get one that's opposite as well if you turn it around. So you have one like this, first of all do this, then you get one, a second one that goes a little bit down, you get a third one that goes like this and then goes up. Now here your neckline will be at this side, meaning if the head, this is a shoulder, shoulder and head. So if that shoulder, if this is the head, it will then basically means this is a turnaround, meaning this is a bullish reversal. Because we were bearish and now we're turning bullish. So you get an opposite head and shoulders too. So, but let's look at that bearish example here on SWE. I saw the other day. I thought, okay, let me show everyone here. So I just got SWE on Binance on the 3-day. And you will see what happened here. Now the nice thing about TradingView, it's got awesome tools in your tool palette. If you go here underneath patterns, underneath pattern, and you click on, say, head and shoulders, you can start estimating all head and shoulders. So what I see here, before we draw the pattern, what I see here is we have something that goes up here and move down. Then we have another thing going up here, moving down, and then you have another thing going up and then moving down with a neckline right about here. So that kind of looks to me like a head and shoulders, what happened right here in SWE, and it played out as well. Why? Because after this neckline right here, we broke down. Boom. We had this move down here to this level here. So let's go check it out. Let's use this tool and let's click it. So I'll take it. First shoulder here, whoop, click, head, click, shoulder, click, and move down. What's cool about this little head and shoulder tool in TradingView is it shows you exactly, you can go and manipulate this, but look at this, it shows you that neckline there, and you can then estimate with your last little leg down of where it can go to. And this went exactly, if you want to take a level here and draw it here, this exactly went, this past levels here, it went exactly to the same levels here. So this was a significant drop. If you want to measure it, we can do it from there to there, measure it. It's about 43% that drop there. Well, let's take it. So let's take it from the neckline. So on the neckline, it's like a 30% drop that the head and shoulder showed us there. So once again, I want to make it clear that head and shoulders is not the only thing that you need to look at. Obviously, you need to look at other indicators for resistance lines, everything. But this is nice confluence. Very, very nice confluence that we are looking at. So that is it for the head and shoulders. So I was speaking about this, but it's a very, very important point that we need to remember. That with, yes, trading patterns is awesome. If you identify them, it's very, very cool. It's a nice confluence tool for me. But it's not the beginning end all as well. We need to remember that. I've seen this in past. People just rely on that pattern. It's the only thing that works for them. No. It's a good confluence point. But again, like we said in the myths, that what we just squashed is confluence between your indicators, between your technical analysis, as well as your pattern lines. All of them bring together. It's a very good point to look at. And that is where you're going to make your decision to say, okay, this is playing out. I can plan accordingly. Let's go with that. but it's very important that we know. Now, remember, I said it before, I come from a crime scene background, right? The crime scenes. And like if you think CSI, and in order to catch the guy that committed the crime, you had to get fingerprints, you had to get photos, you had to get plan drawing, you had to get forensic evidence, you had to get all of those things together to catch this person. Now, the same with trading. You need a lot of facets. You need patterns. You need trend lines. You need You need pattern analysis. You need indicators, candlestick analysis. You need all of that to put together to solve of where the trend's going to go in order for you to make profit out of it. So, for me, in the Ultimate Trading course, this is what I provide. I show you those steps of what you need to follow to get to the end goal using the right tools. And this strategy we use at Day Trade Masters, the strategy we use at MTT, we use the strategy on long-term trading, so it is definitely a strategy that you need to look at. But I think that's it for though. There is also, if we want to go look quickly at the Bitcoin TAV website, where do we find these products? Where do we find these courses? Where can we go and sign up? Once again, please remind me just to like and subscribe here on YouTube, because we will keep on every week being on here. So I'm just going to go to Google quickly and just jump into the Bitcoin TAV website here. And right, there we go. There we go. So this is on bitcointav.com. You'll see there's home here. There's a whole menu here and products underneath products. Now, if you are new, you first need to sign up. So go in here, sign up is quite a easy process. You will you have to put in your name, email address, password. If you have a referral ID, please enter it there. If someone invited you here to bitcointav.com, you'll use their referral ID. Otherwise, you just agree to the terms and conditions, and then you will have a free account. But with this free account comes some great advantages too. You have a free product that we have available that shows you everything in bitcointav.com with all the products, some free videos, some free training, all of that. But let's quickly check out the courses. So if you go to courses here, I suggest this is where everyone starts. Let's go to the courses. Foundational courses, you will find here the All-Nuts course, but also after foundational courses, after scalping training, you will then jump into the Ultimate Trading course. And we also at Day Trade Masters has the Ultimate DeFi course with Corey. We teach you everything DeFi. Definitely something you need to look at as we're going into the future of blockchain, as we're looking into the future of finance, of taxation, home ownership, looking at AI agents, all of those beautiful DeFi type of technology that's evolving yearly. This is the course for you to look at and to apply that knowledge with what you are going to do in the markets. With the Ultimate Trading course, it is quite a name. I know a lot of people tell me, Nico, the Ultimate, that's a huge name. That is, that's quite, that's almost a brave name, yes, but I call it the Ultimate Day Trading course because it is the ultimate. We teach you everything intermediate, advanced that you need to know regarding technical analysis, regarding how to look at charts, regarding what is going to happen, using the right indicators to see what's going to happen. And yes, this is me, myself, and Corey. We are the trainers in this course. And we have also, there's a lot of questions that people usually ask. So I have a frequently asked section here on the Ultimate Trading course questionnaires here. So you can go through all these questions, frequently asked questions, as well as please, I implore you to go check out the ratings and reviews of this course. You'll see I've got a full 5 out of 5, which is great. 47 reviews, lots of students over the years. So please go read all their reviews here. This is all reviews, it's not changed. It's exactly from our students that has taken the course. And really, really good to check it out. And then lastly, I quickly want to jump into, if you go back to medium and day trading, this is what Day Trade Master does. Remember, because we're day trading with Day Trade Masters on the segment on YouTube. Day Trade Masters we have here is this product here, and we also have then MTT. But for just to give value, just to give more value to our subscribers, we have included the MTT reports complimentary with your Day Trade Masters subscription. So that's unheard of. You get 2 products for the price actually of 1. And you'll see also with our price structure, we have a 30-day trial, we have 3 months, 6 months, and 12-month access. And the thing is, what we now are doing, and something new has happened in Day Trade Masters, what we do now, we are focusing actually on the DeFi side of things. We're looking at decentralized exchanges using wallets to trade on there. It's unheard of, no one's really doing it, but yes, we delved into that. So in Day Trade Masters, we now look at that type of signals as well. Now remember, Day Trade Masters is a signal-based product. You get it in a Telegram channel where you get all the signals from Corey. MTT is part of it. So MTT, my medium-term trade reports, as well as my medium-term setups, is also in a Telegram channel. But I also supply each week a good report, thorough report of what we do. So I'm just going to go back here. So have a look at those products. Have a look at Day Trade Masters, medium-term trade reports. Look at the courses. I really think it's a place that you need to start your journey if you haven't done it yet. And let me quickly delve into some of the questions here. So welcome, Louise. Hey, Nico, how many zones are there? There are a lot of zones. You're looking at, I'll quickly dive into TradingView there and just show everyone what I mean by zones. And is the book available to buy separately? Yes, it is available on bitcointaf.com. Is available separately where you can buy it. So I'm going to quickly delve back into my TradingView and just show everyone what I mean by a zone. And this is very, very important. And this is a great tip. It's a great day trading, medium-term, long-term trading tip that I'm going to supply now. It's actually a little secret we teach in the Ultimate Trading course. But let me go to TradingView again quickly here. Now, in a zone, let's do a zone. Say, for instance, we're looking at SWIA on the 3-day time frame. Well, let's go to 12-hour. Let's do a 12-hour time frame like this. Now, what we said in the myths that we busted right now is a lot of people think if you draw a line, say like this green line here, let me just make it very big so everyone can see it. In this green line here, that is the exact price point of 4.442 it's going to go to. Or we're going to go exactly to, say, 4.3. Now, let's take it exactly to 4.3. Let's do that. Exactly 4.3. How do you do it? You just double-click on this. You get the features of that horizontal line that you can adjust here. Not a little tip. There's another little tip for you. If you are struggling, in the beginning when I was in TradingView, I struggled to put this line at exact prices. It's very, very difficult because you have to zoom in and in and in. And just to go to a certain point and drag until you do that. No. There's a different way to do it, an easier way. You can just double click on it and just go, say, 4.3. And you say, okay. And it jumps right there to 4.3. So that's a little tip for you. Now, another tip. If we're talking about zones, we do not mean exact levels. What we do mean is a zone. So if you take, say, a tool like the rectangle tool and you drag it down, this is actually what a line means. So if I talk about a support and resistance level, I actually mean this. This is a zone. So every support or resistance line you have on TradingView is actually a zone. It is not a direct line. It's a zone. So I hope that is very, very helpful. When I realized this, and when I started trading and I realized this, that opened doors a lot for me. And I was not so nervous anymore. It helped me with my confidence in trading. So definitely something that you can apply in your own strategy is looking at what that zone is. But a very, very good question. Thank you for that, Louise. Appreciate it. Let's quickly see any other questions. No other questions. Lots of people watching. Thanks so much for everyone. But yeah, I think we can call it a day for now. Great to have had everyone here at the Day Trade Masters trading with DTM, trading with myself and Corey Gardner. We are always there, happy to assist you. Look at the products, look at the courses first, like I said, then look at the products, look at DTM, look at MTT, and we will definitely be back next week with more tips and tricks and little skills that we can learn regarding day trading and medium-term trading. And yes, this is a segment I thoroughly enjoy, and we will continue with it. So thanks so much to everyone joining us here today. Hope you have a great week further. Keep the risk management down. Keep with good Stop losses, remember your stop losses. Look at your trend lines, look at everything together. Don't just look at one thing. That's what I want you to take away from the segment today. So have a great week further. We talk soon. Goodbye.